My name is Tahir. I'm from Algeria. I'm trader with more than 4 years experience. I was an ICT trader for more than almost 3 years, and now I switched it to simplicity, market structure, supply and demand, and that's it for me for now. I wanna be it is for me a system that works because you don't get too much overwhelmed by concepts, the names, things, timing. I follow just market structure. I do my trade, I go out, and that's it. So what is the definition of a trader? So a trader is someone, it's from Cambridge Academic, is someone who buys and sells goods or services. Okay, what is a financial market trader is a person who buys and sells something such as stocks or commodities futures in search of short-term profits, because trader who do long-term profits is an investor, called an investor. All right. To be a good trader, a trader should have a trading plan, because you don't just go in the market and execute without having a plan. If you don't have a plan, you're called a gambler. You're not a trader. Let's all agree about this. A trader also should have a trading system. A trading system means that you have a concept that you trade, you have conditions to execute, you need to see things, confirmation, retest, you need to have a system to execute, because if you don't have a plan or a system, you're just a gambler. A trader should have also a good risk management. And a risk management is something crucial for a trader. Is crucial and important for a trader to have. Because every trader coming in, I've been in this industry for more than 4 years, and I've seen traders coming in and going out, because they all gamble, they all wanna make profits, they all wanna be millionaires, because that's what the industry is marketing itself to the public. Everyone wants to be millionaire. Everyone wants to have a Lambo. Everyone wants to have a good home near the Maldives or something. But whatever. A good trader also should have a not good but great psychology. And let's forget a bit about this and let's talk about this. What do you think makes someone who have a good psychology and someone who doesn't? The difference is that you need to know yourself. For example, if you are someone who is greedy, you need to accept that you have greed in you and you need to work with it. If you are someone who is fearful, you need to accept yourself and work on it. So the improvements come from knowing yourself, accepting yourself, and working on it. That's what makes you have a great psychology. And in trading, most of the things that makes you a bad trader are fear, FOMO, and greed. Fear because you fear to execute, because you're not 100% sure about your ability to be a good trader. FOMO comes from the fear of missing out of a move. For example, you see markets going this way, a big candle of 1 minute going up, you buy here. Then the market stop, buy. You stop where here, buy. Greed is when you buy here, for example, and the markets move, you keep your position in, even though that the market is switching. These were my problems when I started. I didn't know when to enter, when to exit. Euphoria is when you are too happy about your profits. Okay, let's say this trader did enter here, went out here without having euphoria. This trader entered here and exited here, having a total euphoria, happy about the profits. Oh, I'm gonna make the million because I'm a good trader. This will fuck you up mentally, having the euphoria of having profits. And this is why I always say to everyone to not trade the PNL and instead trading the market and the system. This is the most important factor for you to be a better trader. I want this. And the trader, good trader, should also have balls, because it takes some balls for you to enter here and make profits in just by looking into the charts. It takes you some balls to do so. Now, can you give me a 1 minute break? I will come back in. Sorry, I will come back in just 1 minute. 1 minute. I'm back. So speaking about psychology, everyone is okay with it, okay, right? Okay, so the market has three types of moves. There's an uptrend where you have low, a high, a low. Let me do it. Low, a high, higher low, higher high, higher low, higher high, higher low. And there's a downtrend, lower low, low, a high, lower low, lower high, lower low, lower high, etc. And there's the consolidation. So the consolidation I divided into four type of consolidation. So we have this range, then the breakout this is for an uptrend. A breakout goes without, sorry, do you see now do you see now my screen? Listen to this. Okay. So should I repeat about the uptrend and downtrend, or is it okay for you? It's okay, come on. Okay. So in the consolidation, I have 4 models. The consolidation that this is a range, okay, and without taking the lows, we're going to do a breakout, retest, then a continuation. Same thing here, without taking the highs. Breakout, retest, and continuation. And we have this kind of consolidation when we are in the range. We take both highs and lows. Then break the structure, retest, and go. Same thing here. We take both the highs and lows and continuation. Is that clear for you? This is all you need to know about the market structure. There's an uptrend, downtrend, and consolidation. And in the consolidation, whether it takes the highs and lows together or not depends on what is previously here, for example. Alright, is that clear for you? So guys, someone sent me that there is another Algerian circuit trader in Discord contacting people. That's fucked up. So I will deal with it after it. But is it clear for you what I'm saying about the type of market structure? Alright, let's go now, because I want to go directly to teach you how to validate your lows and highs, and then I will answer some questions, and that's it for today's live. So Alright, so how to validate a low and how to validate a high. So for a high to be validated, this is a high, we need a closer below the high. I repeat, for a high to be validated, we need a down closed candle closing below the high. Closing below the high. For a low to be validated, we need an up candle closing above that low. And when I say low and high, I don't mean for example in high you're taking the down candle. No, you take the high, which this one as a blue. For me in my chart is blue, but is an up candle. Up candles for the highs, down candles for the lows. I repeat, up candles for the high, down candles for the lows. Even if like this here we have the down candle above the up candle, same as here we have this up candle below the down candle. But to validate this low, change the color of your cursor to see clear. Like this. This is better. Great. Okay, so I repeat, to validate high, we need a down candle closing below the high. To validate a low, we need the high candle closing above the high, the low. And for the highs, we don't take the highest candle, we take the up close candle, this one, even though there is a candle after it who have a higher point of that high, right? Same thing as here. If I want to consider that this swing, to consider this swing as valid, I need this candle to be validated by an up close candle closing above this candle, which in this case this one. Here. And in this case there's closing here. Do you get it? Is it clear for you guys? So, for example, to consider this swing valid, I need a closer below that up candle which happens here. To consider this swing as valid, I need an up candle closing above. If it don't close above it, above it and continue, I will consider this as not valid, as not a valid low. And we're going through it, just bear with me. So for example, we have this high which is not validated. We have this high. You see these candles, they didn't close below this low, so we continue. A high without closing below, 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 a high without closing below. We're closing this high until here. So everything happening from here to here is non-structural on this time frame. I repeat, everything that happens between here and here, this, until the up where that were validated, everything here is non-structural on this time frame. I repeat, on this time frame. And the non-structural movements will get liquidated. This will be liquidated, this will be liquidated. And you see it happening here. This and this. So for a movement to be structural, we need to have a high, a low validating the high, and then a high validating this low to be structural. I repeat, this is up candle, this is down candle in red, and this is an up candle. I'm not talking about the wicks. Does it make sense for you guys? This is structural. When we have a high, put in a low that don't validate this high, and we have a continuation. This is this swing, for example, this swing is non-structural, and non-structural swings will be liquidated by the price. Is that good for you? Everything is simple until we're getting deeper about the structure. Exactly, non-valid pullback or non-valid, I won't say non-valid pullback, that I never use it, the term as it is. Non-valid swings. Swing is this, sorry, swing is this or this. Sorry guys for all that looks garbage here. It's my first time teaching, so be gentle with me. Okay, what I don't want to hear about any member is what is a valid high and valid low. So we're going to do it all together here. So let's look at the why you didn't take the up candle, the doji one. You're speaking about this. Amagam gam, are you speaking about this? No previous. This one here? Or you're speaking about this? This one? This one? Listen guys, to consider a high, I need a candle, up candle, and a down candle closing below it. That's all I need. Every weekend here, I don't take it into consideration. Like for example, this one, that's for me. This one here, this movement, this swing. This one I won't take it into consideration. It's just a weekend off on this time frame. I repeat, on this time frame, because on lower time frames you will see this here. On the lower time frames you see this. That's how it is on the lower time frames. But for me now, I will validate this swing high by this candle. So just take a look. Instantly, when the swing gets validated, there's automatically a pullback and then a continuation. So to not return about valid high, valid lows, I will do let's do this chart and do a validate highs and validate lows. Okay, so I start here. So this swing gets validated here. Alright, and we have a low. I won't take into consideration here because there's a range and we didn't validate this low by closing here. So there's a continuation in the move, and we got here this candle. So I will take these two candles here. It gets validated here. It's clear for you guys, this. We have this swing and this low validated here, and then no valid high. This high gets validated here. All right. This low. So this is a swing. Gets validated here. No structural until here. Gets validated here. This is a non-structural high, but it gets validated here. It is not a structural high because you need a valid low, valid high, then a valid low to be structural. Okay guys, you need a valid low, valid high. All right. Again, this low gets validated here. It is recorded, yes. So this high gets validated here. This low gets validated here. And this high, I'm not taking the wicks because I'm trying to just show you how to validate the highs and validate the lows. And this is something that you should work on to make it as it's not that you don't need to go to the market and do this. No, you should just look at it and say this is valid or not valid, because we're going to another step that needs 4 to 6 swings, valid swings, before a reversal or a reach out to a certain zone. So that's another part. This is why this is important. So you need to register this as something that you should see just by looking at the chart. So here it gets tricky because we have this low, all right, sorry, we have this low, and many of you will think that this is a valid low, okay, and it gets validated here, but no. And this is why you see the price coming here, taking this swing and this swing, but not this swing, and then moving down. I repeat, why? Because the lowest point in here was from this candle, the lowest point. If I see this candle closing below this, and this up candle closing above it, I will take it into consideration as a valid low and a valid swing, and I will go short just by tapping to this zone or this blocks. Okay, and this is what happened. You see the market shifted, took every no valid zone, no valid swing, sorry, no valid swing, not no valid zone, no valid swing, took all of them, then shifted down. All right, so same thing here. It didn't close above this high, so taking this, and it gets validated here. Is that clear for you? Mr. BS, it's recorded, and if you don't, if you get some questions, you'll tell me, okay? I repeat. Listen guys, if you know how to validate your lows and highs, you will know how to execute some trades, and you will remove like 70% of your losing trade just by this. You get all the validation except the first low on your charts. This one. Guys, I don't know what doji is. I don't use I don't use the terms like doji, triple bottom, triple M, double Y, double wide. I don't use that. I use low, high, the hammer. Okay guys. Okay, so this one 20 miles, this one. Okay, yeah, for this one, let me correct here. For this one I will use only this because it closed below the previous candle, so I will use only this, and it gets validated here. All right, sorry, my bad, because this candle closed below this one, so I will use only this one as a valid low. Okay, and it gets validated here when this up candle closed above it. All right, 20 miles. All right. So like here it's simple to see that this one gets validated here, and it will help you like to wait for the candle to close. Like if you are taking a short here, and you see this, you won't close here because nothing in this structure is valid. So there's more continuation for it. Okay, this will help a lot. So we were here, and you see this high didn't get valid because it's not structural. You see this wick wicking through it and taking that high. So we'll take this candle and see that it gets validated here. Alright, and as I said, this is non-structural. We take this low that gets validated here. So we come back, we take all the non-structural movements here, then we shift down. Is that valid for you guys? Validating the highs, validating the lows, and non-structural movements. So you have valid highs, valid lows, and non-structural swings or movements. Valid highs constitute the movement, continuation, or breakout. Valid lows, movement, continuation, breakout. Non-structural movement will serve as liquidity. So imagine you come here, you go long just here, just by validating this is valid here, right? You take this trade here, and you wanna reach out, I don't know, here, you will get smoke here. Do you understand what I'm trying to teach you? So the market will move this way, okay, move this way, and then we'll come back, and everything inside this move that is not non-structural will get erased until reaching to a zone or a block and mitigated, and then continue the move. And this is why most of you get wrecked, because they don't know where to enter or they don't know where to exit. Because in this movement you can make money going here, taking profits here, going long here, taking profits here, going long here, taking profits here, or going long here and not taking profits and doing break even, and then wait until the move, the zone or the block gets mitigated, and then you go long. So you can either trade this move, going long here, taking profits, going long here, taking profits, going long here, taking profits, or wait for the zone to get mitigated Sorry guys. So I repeat, you can either go long here, taking profits here, long here, taking profits here, long here, taking profits here, or wait for the move that gets the zone and the block mitigated and then going long. So the difference between this and any other concept is that you're not going to guess where the price is going. You need to wait for the market to show its hand. What is non-structural? I just said it. You were here, Pat? Okay, it is recorded. I will publish it here. Don't worry. So, what is good about this is that I will get deeper into the consolidation, but it's not for now. Now we're just focusing on, in an uptrend and in a downtrend. So, for you as a trader, you don't need to take long here and guess that the price will go up. No, you wait for the move to happen. You wait for the move to happen to come to you here and go long and target the high or the zone that made this move. Because a lot of times there's a lot of times a change in the direction that happen, and you don't want to stay here in the consolidation. You want to go long, take profit easily. Okay, you don't want to guess, you don't want to wait, you want to react to the price action. You're not. Listen, guys, Dave said something that is really important. You're not rich enough, you don't have enough money in your brokerage account or ProFirm account to guess where the price is going or guess what the price is doing. You need to execute what is in front of you and what is available to you. That's what makes you a good trader. So you either be going into small profit and small risk, like going long here, taking profits here, going long here, taking profits here, or wait for the zones to get validated, and then you need to see some confirmations here happening like this in the smaller time frames, a flip, and you go long here. So this is higher time frame and this is the smaller time frame happening just here in this zone. So you want to see a low, a high, a lower low, and the higher high, retest of the zone here, or the block that made the movement. When I say block is this, let me remove everything now. This is, sorry, yeah, this is the swing and this is the block. As you see, there's swings and there's the block. And what you want to see here to go long? At least target this non-structural movement, because we have a high that gets validated, but before the high there's no valid low. There's this low, but it is not valid. So this is non-structural, and the valid high without a valid low will get wrecked. A valid low without a valid high, a valid low without a valid high, it gets wrecked. Do you get this point? I repeat, when there's a valid high, this high gets validated here, but before that high there was no valid low, so that high will get wrecked, fucked. When we have a low which is valid here, but before that low we don't have a valid high, because we have no closure below this candle, so that point will be wrecked, or this point. Is that everyone was here? I wanna see that you get it, everyone. Great. So I will come back in 40 seconds. Bear with me, Pat, because I'm going to speak about the retest and shit. And this will be the last part of the stream of today. And yeah, give me just 1 minute and I'll be back. I've recorded 1 hour 7 minutes. I will post it on YouTube and here in Discord. So what I said about the zones is that you see here we have this move. Sorry. Guys, do you hear me well? Because I'm opening the window and like there's car sounds and everything. Shit. Sorry for that. So we have this move. Let's say here. Sorry. So we have this move here. Shit. this. So we have this. So we have this move here, like this, like this, 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 then broke off structure, and everything here happening is range, because it's not structural. Sorry for the drawing, I'm not Da Vinci, but so we have this, then the broke of structure here also, then everything happening here is not structural, then we have some range, taking out the non-structural move, breaking down, retest, breaking down, retest of the zone, and coming back exactly at this original move that made all these highs. Do you get what I want to say just by looking at this chart? So we have here this high and this low, this lower high here and the lower low here. Then we have the break of the structure happening here, taking this high and this high, which is this high and this high here, and retest. After I will explain what is the retest, I'm explaining to the group. This retest is only what ICT calls and what I call the flip. This is the flip. The flip is used to push price higher, then the flip will get wrecked. This is flip, breaker, call it whatever you want. The low, I mentioned it, you're talking about this one. Yeah, for now is it still valid, because you see we had this movement coming back to the origin move, and then in the lower time frames you see this, you see this, you see this, sorry, let's take just this one, you see this, this is your flip happening just here in the lower time frames. We have a high, a low, a higher high, and retest, then a higher high. So I'm not saying this will go up, I'm just saying the market structure, this is how it goes. So you will have all this movement happening with the non-structural swings here that will get liquidated. Then you will have a retest of the zone And since this is bearish, you will have this, then the flip happening. Get it? You get it, guys? I'm not getting deeper and deeper and deeper inside of this. I'm just talking overall, and you can use this system to trade this movement, okay? And you can wait until here, and you see the flip, retest, and go long. This is an example of how you should use the market structure. So I'm going to answer one question that was how to connect between higher time frame and lower time frame. So this is it. Let's say this is the higher time frames. So in the higher time frames we are bullish here, then we are bearish. So when we are reaching, where are we reaching to this zone, to this original move, and since we tapped in the original move, the original block, so you go into the lower time frame, you search for the flips. This is the daily. You're not, this is the 4 hour. You're not going into the 1 minute and trying to predict what and trying to do a trade of the 4 hour, because it takes it took 15 days to get to the original move in the 4 hour time frame. So you're not going to use 1 minute time frame to go long in a 15-day move. All right, I'm gonna type this daily time frame, 4 hour, 1 hour, and 15 minutes entries. If you're trading the 1 hour, 15 minutes, 5 minutes till the 1 minute entries. This is how we should use the market structure and how to use the time frames, because I see a lot of you guys trading the 1 minute and trying to reach for daily targets. It's just not possible unless you understand every move of the market. So for you now as a trader, you need to seek, understand the market structure. Are we in an uptrend, downtrend, or consolidation? You need to mark up your valid swings, highs and lows. Mark up non-structural movements. Wait for the price to show its hand. Wait for the retest. Execute. So if you stick just to this. I know guys, you're not using daily. You can just stick to this and remove the 1 minute. You can use just this, and I swear, just with what I said, you can be maximum profitable, max profitable, just using this, just this. So another question is area where there's a high probability. So the area, like I said, if you are trading the non-structural here, for sure you will get wrecked. If you take this, this is the swing. If it comes to the 50%, I will go long. Look what happened here. Look what happened here. Again, if you are using a non-structural zone and you're trying to go long at the retest of the zones, you will get wrecked. And this is a perfect example. How to find high probability zones? There's no high or low probability zones. There's non-structural moves, swings, and there's structural swings that made the move, like this. Okay? Another question. Handling failure in trading and how to accept losses. So this is a very important question, and I will answer it now. How to handle failure. If you are using some concept, either this or another one, and you're not respecting the rules of that concept, of course the learning will be difficult. Of course you will miss some moves. Of course when you execute, it doesn't work because you're not respecting the rules of that concept. Even there's people working with EMA and VWAP, and they have rules. If you don't respect their rules, you say that VWAP doesn't work, and you say that if someone taught you how to trade VWAP, you say this is a scammer, it doesn't work, blah blah blah. But the problem is really in you, because you don't respect the rules. And if you don't respect the rules, how you want to accept? How do you want to be profitable when you're not respecting the rules? We have 8 minutes left, so I will listen to your questions if you have any now, and we'll close the stream in 8 minutes exactly. And hope that it was valuable for some of you, and if not, you just have to watch it again. And if you have questions, don't hesitate to reach out to me. So questions. You're welcome, buddy. Yeah, you can target non-structural areas. Yeah, that's a good target. That's actually a good target. For example, If I'm targeting this, no structure, no structure, no structure, I will wait for flip happening here like this. Retest, I would enter here and target this one. Is that clear for you? Sorry. So the non-structural movements are a target and cannot be a point of entry. Okay? The non-structural move are a target and cannot be an entry for you. Another question, guys. Come on. If you don't have questions, that means that you didn't get it. For me, that's how I see things. Because when you're learning something, automatically there's questions rising. Alright, Pat. Alright, BS. Alright, so I have like I think it will be 1 hour and 1.5 hours, and if you like get what I said, just forward the video that I will be posting, and if you have like questions, just go back, and if you still have questions, just come to me and ask me and I will answer it. I cannot do a lot of stuff. I cannot do a lot of stuff in just one hour and a half. I cannot do it in just 1 week, not just in 1 month. It will take time. And guys, I just want to address something for you, is that no matter who tell you this, but it's not a quick money scheme. It's not a quick money scheme. You cannot be a profitable trader in 1 day, and you cannot be unprofitable for years. If you're unprofitable for years, there's something wrong with you. Yeah, there will be a thread about it. Alright guys, so if you don't have questions, I'll just close the stream, and for Phoenix members, let's meet tomorrow, and for the others, maybe next week, Friday, I will be doing a trading live stream, and it has nothing to do with teaching, just trading stream live. Thank you guys, and enjoy your weekend and have good time, and please go backtest, because when you have new information, you need to really put it in your head, and yeah. So Phoenix members, see you tomorrow. For the others, talk to you after posting the video, and see you next week for the free live stream. Bye bye.